Real estate versus stock market. The pros and cons of real estate investing versus stock investing. There's plenty of speculation around which is the better investment strategy between real estate and the stock market. And there's no one-size-fits-all answer. Both have pros and cons and require in-depth research. One thing that all investors can agree is that no matter which category of investment you choose, you'll need to carefully monitor the situation and understand the risks involved. In this video, we'll explain the main differences between real estate and stock market investing and look at the pros and cons of each. Investing in real estate. The saying goes that there is security in brick-and-mortar investments, and for many, this rings true and feels safe compared to other investments. There is certainly a level of security when investing in real estate, as you receive a physical property and can use it to generate rental income. Real estate can generate sizable returns on your initial investment, especially over the long term. There are two main types of real estate investment: residential and commercial. Residential real estate investment strategies. With residential real estate investment, there are two ways investors look to make gains on their investment. The first residual investment strategy is termed flipping and involves buying dilapidated properties and renovating them, selling them for a profit. This is a short-term strategy and is often achieved in the space of a year. The second method of residential real estate investment involves buying properties that generate rental income and using that income to pay off the principal mortgage. This is a more long-term strategy and in most cases also benefits from the increased value of the property over time. Commercial real estate investing. This type of real estate investing involves investing in commercial properties such as shops, warehouses, restaurant premises, office spaces, or shopping malls, and is based on finding a long-term tenant to lease the property for commercial use. Leases vary from anywhere between 2 to 10 years, with longer leases typical for larger commercial properties. Pros and cons of real estate investing. There are pros and cons for both residential and commercial real estate investments, and many depend on the amount of investment initially deposited and how long the investment is undertaken. Pros of investing in real estate. Commercial investments can offer tax advantages, and depreciation costs can be factored in and can reduce the amount of tax liable on any investment gains. Residential investors looking to flip properties can write off renovation costs and reduce the amount of tax liability on any profits made once they have sold the property. Residential investors who flip properties can also do so in a short period of time, allowing the investment capital to be released for future investment opportunities. Some real estate investments are not liable to capital gains tax if they engage in the purchase of a similar property once the initial property is sold. This is known as a 1031 exchange. Investment gains can be considerable for long-term real estate investments of any kind, where the property value is likely to increase over time. Cons of investing in real estate. Real estate investments of any kind usually require at least 20% of the property price as a deposit to secure a mortgage. Depending on the price of the property, it will vary considerably how much capital is required. Real estate investment of any kind has considerable ongoing costs such as property maintenance and repairs, estate agent letting fees, and insurance. These costs can eat into any profits yielded on a property and should be carefully considered. Rented properties are exposed to late or non-payment of rent by tenants, and in some cases, eviction can be a prolonged legal process that carries out considerable expense. Property prices fluctuate, as do market conditions. Some properties cannot be sold quickly and may tie up capital for years. Stock market investing. When you purchase a stock, you own a piece of a company. It will be the company's performance in line with market conditions that dictate how much of an investment return you're likely to receive. When the market is flourishing, returns can be lucrative, while on the other hand, companies can succumb to external pressure and investments can diminish to zero. Every stock market is risky and stock market investment strategies vary considerably. Some prefer engaging in high-risk, high-reward strategies, while others prefer a safer route and choose to invest in companies listed on major stock exchanges around the world. Using the US-based S&P 500 as a benchmark to illustrate market performance, between 1970 and 2016, the stock market had an average annual rate of return of 10.31%. Pros and cons of stock market investing. Every company and market are different and conditions can change quickly, so it's important to understand the advantages and risks whenever investing in the stock market. Pros of stock market investing. Stocks are liquid and can be sold almost instantly in most cases. Transactions are effortless and can be completed online or through a dedicated stockbroker, with returns deposited in a matter of hours or days. While the stock market is volatile and hard to predict, it's not uncommon for companies to increase in value quickly, with some gaining well over 20 to 50% of their value in a matter of days. Pharmaceutical and technology stocks are good examples of positive volatility of a company. Diversity is a huge advantage to stock market investing and allows investors to buy stocks in different companies and industries, mediating risk by spreading investments into diverse channels. Transaction fees while trading on the stock market are minimal. Cons of stock market investing. Volatility is a huge risk for all investors, and it's not always easy to make the best decisions when market conditions become unfavorable. Emotional decision-making is rarely profitable. Selling stocks can also result in capital gains tax, which can negate any gains received from an investment. Not all stocks are liquid. Some find that they have purchased a stock only to discover it drops dramatically in value, making a stock almost impossible to recover the initial investment. Some stocks never recover, and many companies default or go bankrupt, rendering any investment useless. Conclusion. There are pros and cons to real estate and stock market investing, and knowing which is the right one for you will depend on your own personal circumstances. If you're looking to make money fast, consider an aggressive stock market portfolio strategy, or consider flipping property. If you're looking for a low-risk investment that gradually increases over time, investing in leased real estate will be preferable. Long-term stock market strategies are also common and can be established with reputable stockbrokers or investment funds all over the world.